I'm excited to be joined today by Dave Spence, CPA, CFP. He is a voice of warning for the major debt issues that are facing our country right now, and is also the founder of Tax-Free Tutors. And I am so excited to have him on today to explain some of the debt issues we're facing, and also how accountants can partner with CFPs and financial advisors to bring immense value to their clients. Dave, so excited to have you today.
Chayton, it's my pleasure. Good to meet you and good to be here.
Yeah, I've listened to a couple of podcasts where you've been a guest and checked out your LinkedIn profile quite a few times, and I am just so impressed by the knowledge and the expertise you are bringing to the accounting industry, and even to the financial advising and planning industry. So I'm honored to have you here, and I know that I'm going to learn a lot, and I know my listeners will learn a lot too. So, um, well, let's start off real quick. Can you give a quick introduction, maybe your career journey, what brought you to where you're at today?
Sure. I graduated from Miami of Ohio, and I went to a small CPA firm where I worked for about 6 years, and I did a little bit of everything there. And I was talking to somebody just yesterday, a student at WVU, and he was asking questions about the career path and stuff. And I said, one thing I might say is that smaller or bigger is not necessarily better. Anyway, it's like you go to a big firm right out of college, even if it's, like a big Fortune 500 company in their accounting department, or it's a CPA firm, the big four, whatever. You might spend a year just working with accounts receivable, right? And I went to a small firm where I did a little bit of everything right out of the chute. So bookkeeping and tax work and audits and so forth. And it was fun. It was good because I wanted to learn different things all the time. I didn't want to just be doing the same thing over and over again. So that was wonderful. But as I was doing tax returns and talking to individual clients, I kind of got excited about, what the future holds. In accounting, you tend to work with last year or the last 2 years of information, and people don't care so much about that. They care about what they need to do next. And I started raising my own family, and I thought, how am I going to put my kids through college? What's the smartest way to do that? How am I going to make sure I'm okay for retirement and so forth? So I love the financial planning stuff, and the CFP credential was very young at the time. And so I started pursuing that, and you couldn't do financial planning in a CPA world like you can today. There's more of that going on today than there was back then. So I pretty much had to leave public accounting because the best teachers of the stuff that I wanted to learn would represent products too. They would help you get the right insurance or manage your investments with you and so forth. So I left public accounting after about 6 years, and I joined a big company, but I was doing the financial planning stuff that I liked. So I jumped right in because I went with a firm that had 200 sales reps out there, an insurance company that had 200 people on the street, trying to bring in customers. And I would offer to put a financial plan together. And so I had 200 marketers out there for me, which was awesome. I didn't have to really,
Wow.
go cold calling people and stuff like that. But they would bring the clients in, and I would do all the number crunching, and then they would be like, okay, what do we do now? So I had to become a salesperson too. I had to understand the products and help them close the cases. So it was a lot of fun, and it was just, education by fire, right? So I was dealing with, multimillionaires and small cases, big cases all the time. And one thing that I had to get used to was some days I was underpaid, some days I was overpaid, some days I was not paid. If you're not selling something at the end result, there's nothing there. And if it's a term life insurance, there's, maybe $100 commission. And if it's a big estate planning case for somebody worth, $6 million, then you're going to get paid 40 or 50 grand. It was crazy. I wasn't used to that after 6 years in accounting, right? You charge for your time, and everybody believed me too when I was in a CPA firm. But now that I was getting paid a different way, it was like sometimes they didn't believe me. So I was doing the same stuff. I was still being honest and helpful and making them better off. But in some cases, it just didn't work. So it was interesting, very interesting. But I survived all of that, and sometimes I would tell the agent that brought me into a nice case that there's nothing broken here. There's nothing needs to be fixed. And they would be like, okay, that's fine. I love the way you do the work. I love your knowledge level. I love that you understand all this stuff about taxes that I don't get. And we all want to do the right thing at the end of the day, even though we all want to get paid. So if they'd bring me in on a case the next week. So it was really cool. It was fun. So that's kind of where I got started, and I went independent after a couple years, almost a couple decades with that organization. It was a lot of fun. But I've been independent now for the last 15, 20 years.
Very cool. So one thing I want to touch on real quick before we move on to maybe the more exciting main topic of this episode, I touch on a lot the versatility that an accounting degree can bring to a young professional's career. Can you touch a little bit on how your background in accounting helped you as a financial planner and even as an entrepreneur?
Oh, wow. Yeah. Well, my first goal, like anybody's probably should be, is to, get that ticket, the CPA credential. And, you got to be careful where you start out and where your path takes you, because you have to work in public accounting for a while to get there. But I was amazed, if you will, the level of information that provides you. When I got into the financial planning side, and prior to that, I was just surrounded mainly by clients and other CPAs. But when I got there, and there were these 200 agents, and they really didn't know much about anything financial, except what they teach you in boot camp, and they would say this, they would all say the same little lines and stuff. And I would just go into every case asking different questions and never being worried about what they told me or showed me. There's prospectuses on some of the investments. There you go. There's prospectuses that thick, and people aren't going to know what's in it, but you got to be able to explain what's in it. And just being an accountant and being able to look at a financial statement and being able to understand, how you can get income that's tax free because of depreciation and tax credits and things like that. It's like it blows a lot of other people away. So I think it was great to have that understanding of the rules. Taxes are the biggest hurdle to financial success. You can have people complain about the expenses in an insurance policy, or the asset charge that you pay a money manager, and this one will do it for 0.5%, this one does it for 1.5%. That's nothing compared to a 30% tax bite, right? And if you could just be efficient on your tax planning, if you save $1,000 a month, what's the impact of that? How fast is it going to grow if Uncle Sam's taking, a third of it? So taxes are really important to understand. And that's why I think, public accounting is great, because you're going to do tax work, and, understanding all that stuff is just the start of what you can contribute and what you can learn. So I loved growing beyond that first 5-6 years in public accounting, but that was a great foundation.
I love that. And I think it's so important for young accounting professionals to be able to see that perspective, being able to learn from someone like you who used that foundation to become successful. I think we're very quick as young professionals to just want to be to the success stage, but we
Mhm.
often forget the more important stages, which are where we build the foundation that allows us to be successful. And this is what I tell students all the time too. I'm always trying to convert students to study accounting, and this is what I tell them. The exact thing that you just explained, that if you build that accounting foundation, there's really not anything in the finance or business world that you can't do with an accounting degree. So, thank you so much for sharing that, and what great wisdom in building that foundation on accounting. I also love how you're touching the side of adding value to your clients instead of just doing compliance. I think there's a little bit of a revolution going on in accounting right now where we're starting to realize just how much value CPAs bring to the table. You know,
Yeah.
it's like you touched with taxes. It's not just about having a CPA who's going to turn in your tax return for you. It's about having a CPA who's going to find ways to help you save money in the coming years by being your tax strategist, you know, your partner in planning your taxes.
Yeah.
And I don't think we touch on that enough, on just how much value we can add to our clients instead of it just being a compliance deal.
Yeah. Yeah. And the whole system is kind of broken and geared against the success of CPAs doing that. I didn't really do much of that until I got out of the CPA firm. And, when everybody has to file their taxes between January and April, that's just horrible for accountants. It's horrible for them. If everybody filed on their birth date or 6 months after their birthday or whatever, it would spread it all around. So you got these people out there crunching out 300, 400 tax returns in 2.5 months, and they don't really even have time to talk to the clients. How many of them do a tax return and never even speak a word to their clients? And it's a shame, because that right there, when it's in front of you, that's the time to say, okay, we got it right for what happened last year, but let's think about what we can do next year and 5 years from now. Let's start creating tax-free income sources down the road, and let's do it gradually, because you're in the 22% tax bracket, and we got another $50,000 before it bumps you up, but that's only 2% to 24%. After that, it jumps 8% to 32, right? So there's a sweet spot in there that people ought to be looking at and saying, okay, what can I do with that sweet spot and pay taxes now if taxes are going to be higher in the future? If they're not going to be higher in the future, then who cares? It doesn't matter. It's a wash. And if they're going to be lower because you're not earning money in retirement or whatever, then it doesn't make any sense to pay the taxes now. But as I'll get into next is, taxes are going to be higher in the future. Okay. And if that's the case, then all of those tax preparers should be talking about the sweet spot and creating tax-free income sources for when they're going to be in a 35% tax bracket instead of a 22%. It's a shame that more aren't doing it, and that's what I'm trying to help with. So I've been there myself. I've done it myself. I've done it with other CPAs. So what I'm doing is trying to teach these CPAs how to charge more, because there's a lot of price competition out there. But if you're charging, $300 for a tax return, you ought to be charging 1,000, and adding some tax planning in. And the people that won't pay it, good. That frees up hours, and you're making more money, and you're happier, and you're delivering a better service. So that's kind of where I am trying to teach people.
I couldn't agree more. And I'm hopeful that these tax deadlines and even some of the issues facing audit, they're things that could be hedged and changed to where we didn't have the busy season that we have today. And, you know, I'm just a young accounting student. I don't have experience yet. I don't know everything there is to know about the accounting industry yet, but from everything that I listen to and everyone that I talk to, there's ways that this stuff could be changed for the better, not only of the work-life balance of the accountants, but like you just said, freeing up that time will allow tax professionals to do tax planning.
Right.
Or even from the audit perspective, if you were able to spread audits out more or even use technology to start your audit earlier in the year before you receive all the financial statements, it could allow for advisory and for opportunities where the accountants can actually help with the business operations and help with the checks and balances that are in place to make sure fraud isn't happening. And so
Right.
I'm hopeful that these changes are going to come to pass, but it's so good to see that there are people like you that are already pushing for this and helping train CPAs to be able to do that.
Yeah.
So let's dig into the heart and the meat of this real quick. So, I don't feel like a lot of young people understand truly how massive and how terrible the national debt is. Do you want to explain kind of how that problem evolved a little bit? And I would love for you to focus on too what tax rates were after World War II and even up until President Reagan became president, because taxes were way different than what we're seeing today, right?
Yeah. Yeah. I'm dating myself here a little bit, but I graduated college in 79. So that's 1979, not 18. And for the whole decade of the 70s, tax rates were higher. But let me back up and start with the debt. Our national debt right now is over $34 trillion. And just to put that in perspective, a million seconds is 11 and a half days. A billion seconds, that's the next level. We're up to trillions, but a billion seconds is 31 and a half years.
Oh my gosh.
And a trillion seconds is 3 centuries. So we're at a $34 trillion debt. And that's a big, big number. And really, the way you want to measure it is you compare the debt to the GDP, the gross domestic product. It's how much money we're turning around in the economy, right? And the debt to GDP should be somewhere in the range of 40 to 70%. So some debt is good for the economy, but 40 to 70%, we're at 130% now. The only time we've been over in the past was right after World War II. And we won the war. We didn't want to be in that war, but we got into World War II after they bombed Pearl Harbor, and we helped win the war. And we spent a ton of money, and our debt was at 120% of GDP. And in 1945, we raised the tax rates to pay that debt down. And between 45 and 85, for a period of 40 years, our tax rates were 50 to 100% higher than they are today. For all of the 70s, the highest tax bracket was 70%. Today it's 37. And it takes a lot to get to the 37. It didn't really take all that much. It was like 200,000 would get you to that 70% tax bracket. In the 1940s, it was even higher than that. When Ronald Reagan, he became president in the 80s, 1980 or so, and he was an actor in the 40s. He would make a movie and they'd pay him so he made 2 movies and he went to his farm in Santa Barbara and he wouldn't come back until January. The reason was the next dollar was taxed at 94% for the IRS and 6% to the state of California. He would make absolutely nothing after 200. So, and it wasn't just rich people. The average tax bracket in the 60s was like 56% across America. So we paid down the debt with tax revenues, and now our debt is even worse off, and we're not doing anything about it. Why? Because Congress is in such gridlock. If you're a Republican, you don't even speak to Democrats. You certainly don't vote for anything across the aisle. So it's terrible. It's political gridlock, and we're not getting anywhere. Plus, they think they can just keep printing money. If you just make more money, you can spend it on whatever you want to spend it on. But the downside of that is you get more money out there. If everybody's making, 100,000 and up, then there's more dollars out there than there is necessary for buying something, right? And that means that eventually supply and demand are going to bring the prices up to where it uses the same dollars it was before you printed more. In other words, inflation. So inflation is going to be a big problem. And one of the first things they do to fight inflation is raise interest rates. So you see the spiral here. We've got 34 trillion in debt because the interest rates were really low. You could print money and you can charge, you don't have to pay 1 or 2% to whoever bought the bonds, right? With inflation and interest rates going up, you have to refinance that debt at 5%, 6%, 8%. So it's a train wreck that's starting to happen. And we got to get ahead of it, and nobody wants to do it. People aren't going to get reelected if they talk about raising taxes. So if you're not going to raise revenues, you have to lower expenses, right? Well, the top 4 expenses of our country are Social Security, Medicare, Medicaid, defense, and interest on the debt. We already pay $500 billion in interest every year. So our tax dollars, $500 billion of that is just going to China and whoever buys our bonds. And we get nothing for that. That's because we used a credit card in the past, and we're just paying the interest on the credit card. Meanwhile, our debt, if you go to U.S. debt clock, you'll see the national debt, and it's a live thing, so the numbers are changing all the time.
It's so scary. It's so scary.
You've been there, yes.
Yeah.
So, and our debt's going up at like $1 million every 40 seconds. $1 million. And we're doing nothing about it. Now, think about that expense side, those 4 things. We're not going to cut our defense by anything significant, right? Because we have to be the protector of the world, and we're not even doing a great job of that. But Social Security and Medicare being the first and second biggest ones, you got 10,000 baby boomers daily turning 65 on average. 10,000 a day. And you think they're going to vote for congressmen that say, let's cut Social Security? No. They paid into the system for 30, 40 years. They're not going to support that. So this is a real serious problem. And somebody is eventually going to have to say, look, we're out of options. We have to raise revenue. And we've been here before. We did it in the 40s, 50s, 60s, 70s, 80s. So I'm trying to tell people that, hey, don't worry. Don't think you're paying big taxes now. You're 22%, 24%. You're in that sweet spot, Start lining up some tax-free income for when you're in the 45% tax bracket. And you're not going to be paying less because you're retired. Forget about that. And investments, people do pretty well in their investments compared to back in the 30s, 40s, 50s, and 60s. So, you set aside money into a 401k or something like that. It can be $1 million before you know it, during your career. That money's going to compound and it's going to be managed well and hopefully. And, you can grow a lot of money in there. And now you get into retirement and you say, okay, let's start living off all that money. And my nest egg is real nice, but that's going to be taxed at a much higher rate than today. So you better be putting it in as Roth if you can, And even Roth on the 401k accounts, industry, that was a rule change from maybe 5 years ago or something, where you could actually make your 401k contributions either pre-tax or as Roth contributions. I've always told my kids, you're doing everything as Roth. Everything is Roth. And something like 70% corporate America offers a Roth option. You have to kind of build it into the plan. You have to amend the plan to say that Roth is available. And just about 2 years ago, they changed it to where even though employer money can go in as Roth, which means that somebody's paying taxes on it right now. But then all of the money that goes in and all of the compound earnings are coming out tax free later on. But 70% of the companies offer that. Only 35% or so are doing it. So there's a big knowledge gap. So that gap is huge. People don't understand how important it is to manage your taxes over your lifetime, not just over the current year, and that this train wreck is happening with our debt. So there's a lot to be learned there, and CPAs are too busy to take the time and explain it to people until it's after April 15th and before January 15th. So that's the time, if you're into taxes, that's the time where you want to be expanding your capabilities, expanding your knowledge, and offering more advice and doing more advisory stuff and thinking about the future, not just the past.
Well, and it's so growing up where the tax rates have been so much lower, before listening to you and hearing some of your thoughts, I had no idea taxes were even that high way back when. And, we sit here and complain about our taxes now. I can't imagine
Right.
making less money. The quality of life was worse as well compared to today, and the tax rates were significantly higher. Something is going to have to give to pay off this national debt. I agree with you completely. I've always been Roth, so far the only investment fund me and my wife have is a Roth. It was always explained to me that you want to pay your taxes before, not after. Um,
Yeah.
and especially with the fact that rates could be as high as they potentially need to be to pay off the national debt, it's always going to be smarter to pay your taxes before. So kind of moving towards what you do for CPAs and what you're teaching accountants, what are you teaching them and trying to help them understand so that they can help their clients understand what you just explained to me?
Yeah. Well, I'm always using like social media and stuff and posting interesting things out there, like the million a million seconds versus a trillion seconds. So I'm just trying to get them to start thinking and say, what? What's he talking about? And it's difficult because I'm trying to teach somebody about a problem. I can help them solve a problem that they don't even know they have, and nobody wants that. So it's a little bit of a challenge, but it's fun because I'll put out questions to tax professionals, and I'll do a poll or something like that, and they'll come back with answers, and most of them will get it wrong. But that draws the attention. So it's like, really, I didn't know that, and then they start listening, and then they start hearing the size of the problem and stuff. And I've got videos, varying lengths from 5 minutes to 90 minutes, and I'll just explain the problems and throw things out there. But mainly, it's just like, think about it and plan for the future. There are about 7 or 8 different tax-free income sources that you could establish for yourself, counting all the Roth options and even life insurance, cash values if they're used properly. That's a great tax shelter, and it provides money to your family when you die, and all kinds of things. And reverse mortgages, if you build up equity in your home and you wipe out the mortgage, if they raise the tax rates, they say, okay, for 3 years, we're going to raise the tax rates and wipe out this debt. It can't be done that soon. But if they did that, you could say, okay, instead of pulling money out of my taxable IRAs or 401ks, I'm going to do a reverse mortgage and bring in $4,000 a month tax free. Health savings accounts. There's all kinds of tools out there, and people don't worry about them because, like you said, they think they're in a high tax bracket now. You're not. So once you recognize that this train wreck is going to happen eventually, you can start doing things now, and you can manage the sweet spot and the tax rates and all that stuff, and you can have a diverse pool of sources. Because if they change the rules down the road, they might say, "Hey, we meant well when we came up with these Roth accounts, but what can we do? We're bankrupt. We have to start taxing your Roth earnings." Wow, that's all I did. All I did was Roth. But if you have life insurance and you have a reverse mortgage option and you have a health savings account, you got 3 or 4 or 5 different places, you're going to be better off because you don't know what they're going to change. So that's tax diversification, just like you have investment diversification. So it's smart to spread it around. It's smart to have different things going. And I'm just trying to teach people this all the time. And they're busy with tax season. The last couple of months, it's hard to talk to any CPAs, right? I get that. I've been there, done that. But they're so burned out and they're so tired of the same old that they don't want to do it all again next year. And if they don't spread the workload around, it's going to happen. So you ought to be charging more and working less. And there's no reason you shouldn't do it if you can add planning onto compliance, do a much broader offering and you're helping people. The biggest thing I think as a hidden benefit is you're going to prevent people from buying crap. So many people get into bad investments or they don't get the right type of insurance or whatever. They don't know about how to set up their estate plan and what trusts are available that they should be using. All of that stuff means that those salesmen, those 200 agents that were bringing me clients all the time, they're out there hustling and they're using sales pitches and they're selling products that are, built by their employer. There's a lot of crap. So, you are eliminating some of that for your clients if you're involved in that. And if that salesperson has to get past you before the client buys something, that's powerful. And they're going to do a better job and your client's going to be protected. You think they're not willing to pay for that? They are. Believe me, they are. So it's a fun thing to do and it's very rewarding. And it's not an easy thing to do. The two people that ought to be telling you to do Roth conversions and fund your retirement accounts as Roth and buy life insurance as an investment, two people that should be telling you this are your CPA or tax professional, let's call them, and your investment advisor. Well, we all know that your tax professional's too busy. It's too hard to even be an expert on last year's tax rules, right? And you're doing audits for, last year or the year before, and they don't want to go into predicting the future. And they want your tax bill to be as low as possible. So they won't say, let's max out the 24% tax bracket and do a Roth conversion. Oh, by the way, that'll add, $20,000 to your tax bill. They're not going to do that. So the public thinks they're getting the best advice, but they're not from their tax professional because they're just getting compliance. The next person is your investment advisor. And how do they get paid? Assets under management. If they manage $1 million for you, they make 10 grand a year, let's say. If they told you to convert that $1 million from an IRA to a Roth over, say, 5 years or something, they're going to lose 20 or 30% of that to taxes. Do you think they want to cut their pay to do that? They don't. And they use it as a clutch. They say, as a crutch rather, they say, I'm not a tax expert. You have a tax preparer, you have a CPA, whatever. They should tell you if you should be doing these conversions. And I don't think they're going to tell you. If they're not telling you, then let's not do it, right? Well, it's a catch-22, and nobody's really doing the easy things that they could be doing.
Yeah, and it's amazing how much value that little bit of advice could bring the clients to. Like, not just thinking about how much your prices could go up, but how much that could change the lives of your clients. And ultimately, as CPAs and even as financial advisors, that's what our goal should be, right? Is to help our clients and make their lives better, help them make more money. And at the same time, we can make more money too by adding on these services, which is, it's amazing.
Yeah,
Um,
it's a win-win-win situation, really is.
yeah. So you have some courses where you teach this stuff, right? Where can CPAs and even future CPAs, so all the accounting students who listen to this podcast, where can they find those courses and what are they going to find in those courses as well?
Yeah, it's well, I founded tax-free tutors with the idea of making more tax preparers. I hate that term because you're not preparing anybody for taxes. You're just preparing tax returns, right? So I take tax preparers into tax planning, and it's all a matter of teaching people the realities and the options and so forth. So tax-free tutors, there's a resource page with several freebies. I have one, how to divorce the IRS. It's about a 30-minute webinar, and that's free, amicably, of course. And I have a link to go to the course for a fee. It's like $89.99 or something now. It's running out. I had it up to $200. I'm trying to make it more affordable, but that's meant for the general public. It's 5-minute videos, and it's perfect for students too because I do Debt 101, Debt 201, Debt 301, and 401, right? So there's 20 minutes on the debt. There's Roth. No, there's taxes. The next one is taxes. So it's basic tax, understanding the tax rules and the sweet spot, the 22 and 24% tax brackets. And I have 4 or 5-minute courses on that. They're all one course, by the way, but it's just like lessons. So you can stop it and start it whenever you want. You can speed it up. And then there's 4 on Roth and Roth options, or the different Roth rules. People that say they can't do Roth because they make too much money, that's not true at all. There's several ways you can build Roth accounts, and alternatives to Roth like reverse mortgages and HSA accounts and things like that. And then I introduced the life insurance, and I said that's complicated enough that it takes its own 4 courses. So there's life insurance retirement plans, 101 to 401. And then there's a case study that wraps it up. It's a real life case study where over the projected lifespan of this couple, I saved them over $4 million in taxes. It's just amazing. And that's how powerful it can be. So you make these changes and you diversify and you get a little bit of the life insurance going, you get a little bit of the Roth accounts, you get to build up your equity in your home, blah, blah, blah. It's not that hard. And you have to understand there's a problem, and people don't know the problem yet. So it's a 2-pronged approach. You gotta explain that there's a problem here and why it's there and why Congress is not fixing it. And then, what's the smart money going to do? You can divorce the IRS. Basically, we're all married to the IRS, and they get to decide how much of the pie they want. Isn't that terrible? It's like being in a partnership. Your business partner decides how much he or she wants to be paid, and then you just have to accept that and go with the rest. Well, no thanks. I've got all my stuff, in tax free, and everybody should be thinking about that. It's not being un-American. If everybody did everything I'm talking about, we would never be able to solve the debt, right? I'm just talking about a small piece of the pie. Smart money is saying, hey, I'm an American. I'll pay 22%. That's what the law says. I'll pay 24%. And when it has to go up higher, no thanks. I already paid mine. Pay me now or pay me later, but don't raise the rates on me later and expect me to be in the game. I'm going to get out. So my course is it's on Udemy. You guys probably all know Udemy is a learning platform, one of the biggest out there. So if you go to Udemy and you put in tax secrets, it's secret tax planning. What's it called? Secret tax saving strategies your advisors aren't showing you. That's the whole title. But you can get there through the website, taxfreetutors.com, or go straight to Udemy. But yeah, I would encourage anybody to take that, and you see the case study at the end, and it all kind of makes sense. I put that together for CPAs to just give to their clients. If they have 300 clients, let's work out a deal. You pay me $1,000 and all 300 of your clients can watch it, right? I don't even care about the revenues so much off the course. I just want people to start doing more planning. And then I'll hook up a tax professional with a financial advisor, because I'm not taking on clients anymore. People don't want to look me in the eyes and say, where are you going to be in 15 years, right? So I bring the parties together, make sure everybody's good. And it's a win-win-win-win situation then. So I designed the course to be for the public. So the public looks at the course, and then they go back to the CPA that sent them there and say, wow, Chayton, I didn't know all of this stuff. Thank you. What next? What do we do? And that's when they can pull them in and say, okay, it costs $500 to take care of your taxes every year. We're going to do this tax planning and save you over $1 million in the future. And I'm going to charge you $1,500 a year, right? And they're going to say, okay, let's do it. And then you hook up with an advisor to the extent you need to. And, you just start doing a better job for the client, and you're making 3 times as much. And then the next guy that complains about his $400 fee, you say, okay, we're not a fit anymore. Go find somebody else. So it works. I've done it myself. I've done it with other CPAs. I brought $200,000 straight to the bottom line of a 2-man CPA firm. $200,000 a year they were making off the clients for planning and stuff. So, it's exciting. It's a challenge. Accountants are a hard nut to crack. They're introverted, more so than a lot of other people, and they're afraid of selling. It's all little things you can get over. It's all stuff that you can team up with other people to deliver. And, like I said, it's very rewarding and very fulfilling to know you protected somebody from bad advice or bad products, and you've saved them. You've really maximized the efficiency of what they have to pay in taxes. And you have more control than you think you do.
Yep. Wow, I love that. What immense value you're bringing to CPAs and to even just the general public through
Yeah.
your courses. So I will link your website and the direct link to the course at Udemy in the show notes below.
Awesome.
But Dave, thank you so much. I've learned so much. I got some homework that I got to go do now, and take your course and learn some more. And thank you so much for just adding so much value through this conversation. I think my listeners, or I know my listeners, are going to learn so much by listening to you. So
My
one
pleasure.
last question here. If you were to be, well, you are talking to some young CPAs or young to be CPAs in the next couple of years, what would be the one piece of advice that you would give them?
That's a great question. And I tell you, looking back over my own career and stuff, it was to always expand your comfort zone, always work on your communication skills. We tend to be number crunchers and we love it. We're comfortable there. But, sign up for what's the speaking thing? It's out there where everybody has to give a speech in front of the group and all that stuff. Toastmasters, or I don't even know if they're around, but there's things like that. So get used to speaking in public and just speaking to everybody that you can. When you do some work, talk to the people about what the results were and what they could use them for. If you're in auditing, you learn so much about business operations that you'll go to the next job and you say, well, you know what? There's another way you could be doing this. I learned this on the last job. You ought to think about this or talk to your boss. Just be an advisor. You think about the future. Don't get stuck on the past. Remember that, big is not necessarily better if you're going to spend a year and a half on accounts receivable before you get to do something else. Get into a smaller firm, see the diversity that you'll be able to experience, and always be building and work on your people skills. That's where you're going to make a difference, because the people need to trust you and like you in order to listen to you. So I think anybody that pursues accounting is smart. They have to be smart to succeed and pass all the courses and the demands. So you've got the knowledge, work on the rest of it.
I love that. In school, we focus and talk so much about the technical, but like you just said, what's really going to accelerate your skills, the technical skills are going to come, but what's
Right,
really going to blow your career out of the water is being a people person and having those soft skills that not everybody else has. So I love that. Well,
right.
Dave, thank you so much. Look forward to staying in touch with you. And thank you so much for being here today.
My pleasure, Chayton. Thank you for having me, and I hope it helps somebody in a big way.
Of course, I know it will. Thank
All
you.
right, all right. Take care.